And this is Alex with MasterChartsTrading.com, and today is Friday, September 15, 2018. So a little bit briefer than previous videos. We'll briefly look at stocks, briefly look at bonds, the junk bonds, the dollar index itself, and look at gold, see where it's going to rebound hopefully, and then we'll look for a shorting opportunity there. Oil is bullish, and this opposite is true of natural gas, and we'll finish off with cryptocurrency review. So again, throughout this presentation, I'll be using my own indicators, and the indicators are these 4 lines on the chart. You can find out more about them by going to MasterChartsTrading.com. You can also find me on TradingView.com. Look for me on MasterCharts, and these are the indicators, and I can share these indicators with you. So find out more about it at MasterChartsTrading.com. On this chart, S&P 500, you can see that the price is approaching fresh highs. So this is an unequivocally bullish chart. That simply means that I will only think about buying. I will not think about shorting or selling this chart, and I would be looking to buy at places where the risk is the lowest and the possibility of reward is the highest. So to me, these areas are around the blue indicator line. So let's just backtrack a little bit, and we can go back to January of 2018. You can see that this is a fresh high, all-time high on January 26, 2018. So here I'm thinking, okay, I want to buy. Where do I want to buy? I want to buy around the blue line, which was then around 264. So there is the alert. It was sent to subscribers. I would have put my stop at the yellow line. So at that time it would have been around 240 or so, and from then on I would just look, again, only look for buying opportunities. Don't look for shorting opportunities, because we don't know where the top is going to be. The trend in this case is up, so we should be looking to buy. So for example, here is a great example of how I look for trades, and when I send the alerts to my subscribers, this is what they get. So for example, here is an alert on 2nd or 5th of March 2018. You can see that the only thing that I did is I was looking for a low below this blue indicator line and then a close above it. So this is the only thing I'm looking for bullish securities, and in this case S&P 500 was bullish, so the alert was sent. Same goes a few weeks later, and there is the close above the blue support resistance line. I don't think I sent an alert at that time. I don't remember exactly why, but a few days later, a few weeks later, here's an alert that was sent on May 9th, and the same thing basically. We're another alert here on May 30th. So trading is really boring if you think about it. We simply need to create a plan and then faithfully execute it. So here's my plan. My plan is to look for a bullish security, and I define being bullish with a close above this blue line, and definitely with a close above the green line. And then I will be looking for a pullback towards the blue line, and I'll be buying there. I will not be selling or shorting. And this is basically a boring plan that I devised, and it's been working really well, and I think my subscribers are pretty happy about it as well. So again, you can find out more about these lines because you can trade yourself at MasterChartsTrading.com. So we will look at United States stocks. S&P 500 fresh highs. or rather fresh highs were just a few days ago, unequivocally bullish chart. Let's look at non-United States stocks. So let's look at Europe first. Here's VGK, which is a proxy for European markets, unhedged equity. So there is also a fluctuation of the currency that is baked into the price of this security. I think this is bearish and to be avoided. If you are so inclined, you could theoretically short this security. I'm not a big fan of shorting equity, especially when the S&P 500 is in a clear uptrend. So this situation in Europe for VGK or EZU, VGK, let's just stick with that. You know, with new lows being made, I'm not, I'm not 100% if this is a global bear market about to be unfold, or is this a fluke and Europe will actually catch up to the United States in the weeks and months ahead. So for me to become interested in this chart, I want to see a close currently on September 14, 2018, a close above 60 bucks here, basically, above this blue indicator line. And then once that happens, then we can say, okay, we're now very likely in an uptrend, and then we can continue looking for buying opportunities. This chart to me looks like it's a downtrend, and I would be looking to sell it, to short it. So a couple of decent opportunities. It's a little bit more obvious if I go to EZU, and you can see a very clear example of what I mean, how price really behaves in a certain manner. And if you see this price behavior and you're able to exploit it, then you can make money in the stock markets. And then but besides just being able to see the patterns, you have to do other things. For example, control your risk. For example, at this point here on August 28th, if you are truly decided to buy puts or sell short, or buy an inverse ETF tied to this security, then you need to know how many shares of that inverse ETF are you going to buy in order to prevent your account ruin in case this trade was going to go against you. And this happens all the time. You need to control for your risk. So I would say 50% of success in trading is just knowing how many shares to buy. So let me give you a very quick example for S&P, how I calculate the position. So for example, you can see long position, I would have done something like this, but I like to put my stop way out here, and here is the average true range, ATR. So I look at ATR and I determine the target. If that made any sense to you, then good. But if it didn't, then please send me a message, or maybe make a comment below, and we can try and go over the risk controls, which are probably the most important thing in trading. So going back to equity, here is VGK. Bearish security, and I would say I wouldn't be avoiding it. Emerging markets, EEM, made a new low just on September 11th and then bounced. So this looks again like an unequivocally bearish security, and if you're so inclined, you could theoretically short it. I would short it personally. If I was shorting it, I would short it at like 45 bucks because the risk there would be very small, because my stop would be at 47.79 here. So in other words, I would have been willing to, here we're gonna do it, short position. Theoretically, if the price action confirms, and obviously the price action hasn't confirmed yet because we're still trading well below the levels, but something of this nature would have worked for a $100,000 account. We would have been able to buy or to sell short 352 shares in case of our position going against us. We would lose only $1,000. See, 99,000 remains of our account in case of failure. Now, Target is a completely different story, and we can talk about it later. If you're interested, again, send me a private message. But for this particular trade, if I was trading it, I would have probably looked for a top-in pattern around 44.92, and then I would have sold it here, shorted it. Finally, Japan, EWJ, basically doing the same thing as the rest of the world. Notice how nicely it bottomed just around this yellow support resistance line. Almost touched it on the September 7th, 2018 and bounced. So we're now basically waiting for a bounce towards the red resistance line at 58.80, and then we could look to short this one if we're so inclined. Alright, let's continue to bonds. Okay, so if you listen to several of my previous videos, on 31st of August here I said that I really did not like this red candlestick. I actually put a arrow, wrote this sign here, short, and again put a question mark there. Not, you're never sure of a trade, but this one I was like really unsure because I really kind of liked the price action here from early August. I liked the way the price bottomed right around this yellow line and then bounced higher, and I thought we actually could continue higher. I liked the way that indicators curved. This was not enough. The indicators curving down means that the price will have very less distance to travel towards bullish levels. Obviously, this did not happen. This candle was, this is indicative of a strong selling pressure. Notice what happened next day. There's a gap, and then strong selling over the next few days, basically. So right this instant, I'm avoiding all bonds. My subscribers are avoiding, hopefully, all bonds too. Here is AGG, Aggregate Bond Fund, also approaching August lows, LQD. Quite a bit of selling after not even a strong enough bounce. So overall, bearish. I would probably avoid investment grade corporates and treasuries for now. And then we will see where this goes. Here is the treasury yield, 30-year treasury yield, approaching breakout levels. Possibly we can see a move higher here. So yeah, investment grade corporate, investment grade treasuries not doing great. Junk bonds, the high yield bonds of all nature, of all sorts, are approaching resistance levels here at $36. So yeah, it doesn't look too bad, especially if there's going to be a breakout. And I mean, if this fund closes above 36.57, then unequivocally in a bull market. Here's HYG. This has even less distance to travel towards bullish levels, so this one is looking even better. If or when it closes above 87, then we can potentially look for buying opportunity. But what's important is junk bonds and stocks, they move in lockstep. In other words, if stocks go up, junk bonds also go up. So overall, this would be a good sign for the stock market if the junk bonds moved higher and rejoined the bull market of stocks, because junk bonds basically are slightly less volatile but trade similar to stocks. Alright, let's continue to the dollar. So I have cut down on the number of securities I'm covering in the public videos. The reason being is right now I'm sending alerts about Forex as well. So like if you are interested in trading euro versus US dollar or British pound or Japanese yen, you know, pretty much anything, then I've been sending alerts as well through MasterChartsTrading.com. You can sign up for a free trial there. So here is the dollar index, but you know it's indicative of most other currencies in the world, except for Mexican peso, and we'll get there in a few. It's very interesting. So this chart is a bullish chart. There's the breakout that occurred in May 2018, end of May 2018, and from then on we basically entertain only bullish possibilities and setups. Here it seems like the dollar has bottomed already. I think it wants to go higher. I think we could easily see a breakout to fresh highs above 97 here. Yeah, even without the index coming down to like 93 here, you know, it's possible we can just continue higher from here. So this is weighing on XAU USD, the gold. We can do GC1 exclamation point. See how there was a close above the yellow support resistance line, and that's not a good sign usually. So this is a sign of a strong selling, and to me this would have been a trigger if I was aggressive. So you know, we can actually put the arrow there and say that okay, as if we opened a transaction, as if we opened a short transaction. But again, these are aggressive short levels. My preferred level would have been at 1243 basically right there. So we'll see if the aggressive shorts are correct or if the conservative shorts are correct. GDX, for example, here is GDX also fresh lows, very strong selling, a lot of selling. Notice there was several short here, arrows, another couple of arrows. So conservative shorts here on the 28th of August really worked out well for them, and you can see a nice move lower because you know, obviously you want it to go down if you're shorting it. So overall, I would say that on any bounce, gold should be shorted, and same goes for gold miners. Alright, very briefly, US oil. I think it's a bullish security. I think it could go to 65 to this blue line, but I think the direction is higher. So, I mean, if it does come down to like 65 bucks, I would be personally very interested myself. Here's natural gas, doing exactly as I expected it to do. Very nicely. You know, there was a couple. I actually opened myself a UNG. I closed it recently. I got stopped out right during this fluctuation. So yeah, I got stopped out. So I sold a half position, moved my stop to entry, and I got stopped out on the 12th of September. Still, you know, I made like 15% because of something like that. Because I had multiple contracts, so I sold half of my position in puts. So I bought a $20 puts for with expiration of 2019. I'm sorry. with expiration in January 2019, and on the August 15th, and the position went in my favor almost immediately. Here I was a little worried on August 30th, 31st. I was a little worried that I'm gonna get basically my little profit will be wiped out, but then we had a nice significantly more selling. I sold half of my position here, moved my stop to entry, and then boom, I got stopped out. Very unfortunate, because I think it could continue lower. I think natural gas could easily break support at 2709 and continue lower. Briefly about the cryptos, Bitcoin. I think it's ready for a bounce. I think the prices could easily bounce to 9300. That would be an awesome place to short. So we can put an arrow there, for example. If it even gets there, so yeah, downtrend in security and basically should be shorted. Ethereum recently hit new lows and basically just doing nothing here. Litecoin, the same thing, fresh lows and just bouncing back. EOS USD, EOS USD, EOS USD. There we go. Same basic principle. You can see breakdowns and then opportunities to short. All right. Please head over to MasterChartsTrading.com, click on alerts and indicators, and sign up for a free trial, 30-day free trial. You get alerts about the stocks that I follow. I follow about 100 stocks. Alerts about US and global ETFs, about 50 ETFs or so. You get several videos per week, daily alerts obviously, and there's also members only blog. Yeah, you can ask me questions by email, and of course I send alerts with the risk controls clearly shown. With the higher levels of membership, the alerts and indicators membership, you also get the indicators, and I already showed them. The indicators are the ones that you saw this presentation with, this green, blue, red, and yellow line. They simplify trading, and they just improve your ability to see price action, to visualize price action. This way you can easier see what do you want to do. You want to be buying, you want to be selling. So at the very least answer that question, and then answer the second question, where do you want to be buying, where do you want to be selling, and then answer the third question, is how many shares are you going to be buying and selling. The fourth question is, are you going to be able to handle this whole thing? And that's like a psychology of trading. It's a completely different subject, which is also very important. Alright, if you have any questions, please send them in. Like this video, share this video with others, and sign up again. Thanks for watching, and have another great trading week. Bye-bye.